September 17th has been historically for the last 20 years the beginning of a major downturn.
What is going on, traders? Welcome back to the Traveling Trader. I want you guys to pay attention what is going to go on in the market for the rest of September. There is some extremely compelling analysis and data regarding what happens usually after September 17th if history is any indicator of future behavior. And if you are worried about your portfolios in the short term, you definitely want to pay attention to this data because, as I said, it is really compelling and pretty comprehensive, actually. We will take a look at it in detail, and I will tell you what stocks I'm looking at considering the current market landscape, as well as going over some of the current plays that we have at the moment. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what stocks you're playing and what you think of the current market conditions. Without further ado, let's get right into it. As I said, there's historical precedence for what I'm about to say. I see this article here where Cramer is warning investors about buying the positive market openings, essentially being faked out in the beginning of the day by what you think is going to be a green market, but it ends up red. This has happened the last 5 days in a row, as you see here. The market is essentially losing momentum because, as we've talked about on this channel before, the market looks like it is hitting an interim top, and there are no more catalysts between now and the end of the year to tide us over, besides a couple of things. One being the infrastructure bill, two being the continued Fed policies and looking to see what the Fed is going to implement. Other than that, most of the monster earnings are actually priced in, and the market is ripping into all-time highs day after day. 51 all-time highs, I think, in 2021 so far on the S&P 500, which is a record. So it's no surprise right now a lot of analysts are predicting some sort of pullback. Now, let us look at this September data that I was talking about. We'll turn to our good friend Jim Cramer and see what he has to say about it, and then we'll look at the data.
I don't know. I mean, I think that this, do you fade the opening? The opening has been up every single time, Becky, and then you get completely faked out. So I'm concerned that we just have another positive opening. People come in and buy, and then they get hurt. So I really caution people to come in. September 17th has been historically for the last 20 years the beginning of a major downturn, and we're right on the eve of that.
So he said that September 17th is historically the beginning of a major downturn. Now, what is he talking about? Well, he's talking about his good friend, Larry Williams, who is a famed investor and stock market strategist. But if you take a look at the chart that Larry Williams' firm put together between 1998 and 2021, if you take a look at the S&P 500, September 17th, just as Cramer said, is usually the beginning of a downturn. This is going back 23 years. So there is 23 years of precedence for this, right? However, it's important to note that the stock market actually ended up higher than this point towards the end of the year. That's why I made an emphasis on short-term trading or short-term traders. If you just shut your laptop off on September 17th and woke up on December, based on this data, you would be fine and the market would actually be higher. So what do you do about it if you're a short-term trader? Well, let's take a look at this data a little more closely. Digging deep into Larry Williams' data, you see here that on the 7th trading day before the end of September, this year would be September 22nd, so coming up in a little over a week from the recording of this video, selling on this day has netted profits in the short-term trades 100% of the time over the past 22 years. That is actually a wild data point, but there has to be an emphasis here that they're talking about short-term trades, meaning if you have short-term trades where you expect there to be bullish momentum in the short term, selling on September 22nd would net you profits 100% of the time. And if you sold between September 15th and September 28th, you have a success rate of 80% to 95% of the time, which is still outrageous. Now, as you know, my position is I don't believe in staying fully divested from the market. So if you are a long-term trader, especially if there are tax implications here, right? Selling your holdings before a year has elapsed, then I don't think one should go out and just start selling everything. But if you are in short-term positions and you're wondering whether to take profits or not, then this is where this data becomes really helpful, as well as setting up shorter term swing trades and options trades, which we'll talk about in a second. So please don't misconstrue this for saying that, hey, if you have a long position on Apple or Home Depot or some really high conviction stock of yours, that September 17th is when you should sell. This is really isolated to short-term traders who have short-term trades that they are looking to secure profits on. So just in summary, I agree with our friend Jim Cramer here that buying the tops could be dangerous just because the day looks like it's going to start off green. And as I stated before, the S&P 500 in 2021 has not yet had a 5% pullback or more, right? Each of these is less than 5%. You could see them highlighted here in the blue markers, which is just crazy. So due to the fact that we had disappointing non-farm payrolls, right, expecting job growth of 733,000, and last week we only got 235,000. The CPI numbers are due out this week, which will tell us how bad the inflation is. The fact that we have very few catalysts between now and the end of the year, I could see that this market landscape is ripe for a pullback to a correction. With that said, there are actually quite a few stocks as support that we should be watching here. Some very lucrative value and growth plays that I'll go over. I'm going to share with you this full watch list, which we send out to all the patrons, the website members, as well as the channel members, the ones who just support the channel by clicking that little button down there. I share this with them because I want to be able to give back something just for supporting the channel. So this isn't only for the patrons or the website members that are part of the private Discord trading group. At the open, OCGN was on the stock market watch list, and you could see here OCGN had almost a 20% day today. We're looking for support on AMD, on NEO. We'll go into some of these charts right now because I want to show you what I'm talking about. But AMD sitting at the 50-day moving average here, forming this bullish pennant ahead of their potential merger with Xilinx. NEO, which recently did a stock offering, is sitting here at 300-day moving average support. I'm definitely looking at Pfizer here, sitting at the 50-day moving average. Now, these are all on my watch list. What I'm looking at is to see if they can establish support here, or will they keep dropping in the next few days? You don't have to rush and buy everything at one price point. Intel is another stock that we've been talking about for a long time, up 10% since bouncing off of this major support here. Definitely looking at some of the finance and banks like Visa, which is sitting here at the 200-day moving average. Also Citigroup, which is sitting here, I think, at the 200-day moving average. Yep. So the point is there are currently some beat up blue chip stocks that are of great value right now, sitting at major moving averages or major support levels. These are the types of plays that you want to pick and choose to start investing into if these are high conviction names for you. Now, in terms of short-term plays, as I've said before, and we've said on this video, September is a month that we expect to be choppy, if not bearish. If all you know how to do is open bullish positions, you are not doing yourself a favor. We had this bear call spread on Nvidia. We needed to stay between 226.25, currently trading at 218. We're up almost 40% on this position. In the Discord, we had a bear call spread against the NASDAQ, which is the QQQ index. We closed that for 90% profits. We had a bullish trade on the VIX, which is the volatility index. Again, expecting that volatility to increase with these market conditions in place that I just talked about. And if you want access to all of our trades, link is in the description below. I sent out each and every single one of these trades that I went over. So again, learning how to hedge, learning how to play the other side of the market, learning how not to just be a perma bull all the time, where the market will light your ass up, frankly, right? So you have to be prepared with as many tools as you can grab in your toolbox in order to combat these things. Now, please keep in mind, I'm not talking about a full-on market crash here. I'm on record as saying I don't believe that we will see a bear market, meaning a drop of 20% or more. I do think that we will be in pullback to correction territory, somewhere a little over 5% and less than 20%. And if Larry Williams' historical data is any indication of how the market will go after September 17th, and you have short-term positions that you are up on, especially if those positions are part of the major indices, if you're dealing with NASDAQ and S&P based stocks, then pay attention to this data and act accordingly. Act as you wish, right? Like, take this data for what it is, do your own homework and act accordingly. But basically, based on this data, if you have short-term positions that are up, you want to think of selling them on September 17th. Again, if you have long-term positions, I don't think it makes sense to take on that tax burden just for a month or two of savings, because you might be paying more in tax for selling your positions earlier than a year. Anyway, traders, that is it for this video. If you got anything out of this video, you thought it was helpful, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what stocks you are playing. Let me know what you think of the current market conditions. If you want access to all of our trades, link is in the description below, where you will also get access to the watch list that I showed you earlier. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.